What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Ed Mathews. How you doing today, Ed?
Good, Dan. How you doing? Good to see you,
I'm
buddy.
I'm fantastic because I don't know if you know this, Ed, but my very favorite audience member is joining us today. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators, buyers, sellers, investors, all that kind of stuff. And why do I do that? Well, part of it is because I know that most of the deals that are out there are private. They're not allowed to advertise about them. The only way that you're allowed to talk about them is if you have a prior substantive relationship or it's documented, and so the SEC can see it and all that kind of stuff. So that's what we're doing here. And most importantly, we're making sure that you can figure out how my guest fits into deals. But before we get too far into that, Ed, do you want to introduce yourself a little bit?
Yeah, I'm Ed Mathews, based here in Connecticut. I'm the owner and founder of Clark Street Capital. We are a syndicator and real estate developer here in Connecticut.
Beautiful, beautiful. So the next step, the first segment that I do here, it has to do with the motivations. But before I get to that, I say, but wait, check your eight. And Ed, if you look at your camera like a clock and you look at the 8 o'clock, you might be able to see into the audience's device and see if under there's a big, hideous red subscribe button or not, because that really should be the gray one. That's a joke. Let's just exactly, you got to make sure you hit that. But let's go through the five distinct motivations. The first reason I found some people get into commercial real estate, keeping in mind the fact that it can take months to close one of these deals, there's got to be a really good reason for them to keep doing it. And one of them is preservation of purchasing power. What does that mean? If somebody already has a portfolio of assets and then the way they make ends meet is from the profits, from the money from owning it, then they are more likely to make another acquisition to preserve that purchasing power. It's also
Right.
possible that maybe there was an asset crash and so they can buy at a discount. Regardless, that's not what I'm up to. Now, what I am up to is trading time directly for, excuse me, I had a tickle in my chest and it was really waiting. But anyway, so trading time directly for wealth. I got a background in technology, specifically
Wow.
it's CRMs that take orders. And so that made me go, it's like, well, wait a second. If this is more heavily taxed than any other way to make money, doesn't it make sense for me to pivot and find ways to be rewarded in the form of deployed capital? And that's
Right.
what I'm up to. But many people are attracted to commercial real estate because they're trying to take control of their schedule. Maybe it means that they're fast tracking retirement. Maybe it just means they want to work fewer months per year, fewer weeks per month, something like that. But the next group, though, they're just plain ambitious. They want to buy their entire hometown. They're after that generational wealth to make sure that their great grandchildren never have to hold a day job. And so the nice thing about these guys is they're going to be hustling into their 90s, which is very important, just like the last group. But it's not really ambition so much that they've found a sector of society, or maybe it's animals, the environment, who knows what it is, but they realize that you need a substantial financial backing if you're going to make a big difference in people's lives. So, Ed, of those five, what combination of those would you say describe you best?
So I would probably fall into the help people who need it bucket. A lot of our business is around buying dilapidated buildings that from landlords who really aren't very good at their jobs. And we use that to create a portfolio. We're very much cash flow focused. And then over time, we've built a base of an asset base that enables us to also do a whole bunch of other cool things within the community. So.
Yeah, that's a great motivation for doing all of this sort of stuff. And one of the things that I find is that a lot of people who are more on the idealist side, wanting to save the world, like I got to make sure that they understand that there are risks involved and that this is a competitive and complex business. So I always have the tolerance for risk assessment that I do. So, Ed, my question is, it's a fill in the blank one. There are many popular investment asset classes, but I think blank is too risky. What's too risky for you, Ed?
Stock market. So, part of what we're doing at Clark Street is, I fundamentally believe that we have a moral obligation to help people invest and diversify their own wealth outside of the stock market gambling machine.
I love it. I love it. And so let's get on to the next part, which is specifically about commercial real estate. I realize that if you ever want to get into commercial real estate or syndication, you're going to have to learn how to effectively communicate on how these deals work. And what I have for that is the dandoesdeals.com commercial. Well, it's got its own gravity, apparently. Commercial competency cube. It's got the 6 different roles in a commercial deal. You can go to dandoesdeals.com. You can download and print out your copy. It's totally free. I don't even ask for your email address. That's a really bad idea. You should always ask for contact information from a marketing perspective. But I always go through all 6 sides in every single one of these chance encounters just to make sure that you understand how my guest fits into these deals. So let's go through them. First one, the repositioner. The repositioner is an acquisitions person. They're doing a bunch of paperwork. They're looking at a bunch of different properties. And what are they looking for? They're looking for upside. That means more profitability. How do they do that? What are they doing with this paperwork? Well, first thing they're doing, there's a fancy word, they underwrite the deal. That means they're doing the math. They're figuring out, first of all, is this property even making the amount of money that the broker or the seller claims it is? And then after that, they figure out, well, what can we change so that the business is more profitable? First place they're going to look, financiers. If you get better lending, that goes straight to your bottom line. Okay. If it's a cheaper loan, it's easy peasy to do. Financiers are people who deal only with paper and money. So they have no operations jobs or anything like that, if that's all that they do. But if the repositioner can't get more advantageous lending, the next place they're going to look is operations. They're going to stop those Benjamins from going down the toilet, which is over here. But there's more to operations than just unclogging toilets. And once you get to bigger deals, you're going to be outsourcing that to a third party anyway. But my real fortes in when it comes to operations has to do with automation because of my CRM experience. And then of course, marketing as well, which might be important if you have a vacancy rate problem. But operations, because it's so competitive, the repositioner probably won't be able to find that much room in the operations alone. So the other spot that's very frequently added is the contractor piece, the value add, the renovations. You do the renovations so that the next tenant will pay more in rent than the previous one and be happy to do it. But fixing things up is very, very expensive. It can turn your business upside down very, very quickly. So if you're going to be doing that and you've got the same problem as a repositioner that I do, see, I'm from the internet. So that means I need a local. I need somebody nearby who can be there in an hour or so because I'd still be stuck at the airport. Okay. So it's definitely not going to be me. But when a repositioner turns around to the financier and says, hey, I want this building and it's worth tens of millions of dollars. Do you have, say, tens of millions of dollars you want to lend us? The financier is going to have one big question on their mind that I haven't mentioned yet, which is, who is your sponsor KP? So if you have a few pals that have some resources and you want to take over, say, a 350 unit apartment complex, you're not going to be eligible for the loan unless you have somebody in the fold who already owns a similar asset. Okay. So on top of that, you're also going to need a certain amount of liquidity. And then you're also going to need a balance sheet among the GP team of at least the amount of the loans. But if you have all of those pieces, you got yourself a commercial real estate deal. So Ed, I'm sure you have some sort of acquisition repositioner role. You probably have some asset management, and everybody who's a repositioner has some financier roles. But where would you describe your core competencies that you're most likely to contribute?
So I am a contractor for sure. We're very much a value-added investor here.
Okay, beautiful, beautiful. So then the question, like if you're on the contractor side, you're going to be focusing on value adds, and let's talk about the buy box because that's the next segment. So when investors are talking to each other, syndicators in general, they're saying, "What's your ideal property?" They're really asking for 3 things. First one's geography. Where is it? So we're talking which states, We're talking about which counties. We're possibly even talking about which neighborhoods. That's going to matter. Second one's going to be size. We're talking about multifamily here, so the size is dictated by the unit count because you're going to have different teams taking over 15 unit buildings compared to 350 unit buildings. Okay, so that size definitely matters. And then the third one is class, and unfortunately, they use the same word for two different things. The first one has to do with the condition of the building. So is it old and beat up, or is it up to date but not that exciting, no amenities or anything like that, or does it have a ton of amenities and luxuries, and that's the type of condition it's in. The other version of class is also sometimes called area, and that has to do with the crime rate where the property is located and the school districts where the property is located. But both of those two meanings of class use the same system as in grade school, where it's like A plus, A minus, B plus, and so on. So Ed, if you're on the construction side, you're heavy on the value add, more likely than not. But what's the easiest property for you to take off somebody's hands?
So if we're local, in other words, in the state of Connecticut, typically the eastern half of Connecticut, we're very comfortable taking over C assets. And in fact, that's pretty much our entire portfolio here in Connecticut. Outside of Connecticut, we're more looking at B class.
Okay, cool. And then so the C, so that's the C class, and then that's the area though you want mostly in Bs, or are you looking to upgrade even in better parts of town?
Well, B class here, the reason that we're looking outside of Connecticut is there are not, here in Connecticut, the larger units, properties range from 6 to 50 units, right? There are very few units in that 75 to 300 unit range.
Mm-hmm.
And so, those are outside of Connecticut. And our thinking is that with a B class investment, it's a little bit less labor intensive from an operational perspective as well as from a contractor perspective.
Mm-hmm.
And so, we're looking at Louisville, Lexington, and the Carolinas.
Okay, beautiful. So my next question then has to do with people, because as you noticed from the die that there's all these different roles, so nobody's going to be covering all six sides of this die for any meaningful amount of time. But even though that's the case, we all have our own unique skill sets, and so we're better suited to help some people more than others. Me in general, it's the sponsors and KPs that will move me ahead in my career because of my marketing and automation and all that sort of stuff. Ed, I think you mentioned before that you generally do C deals, not Bs, and that you are accredited. So there's a problem with 506B. If you have a deal, then you're not supposed to entice investors. But I guess that means if you have like some sweets or pastries or something, don't like wave them in front of the camera. But if you just stick to C's, you can go ahead and entice whoever you want. Who are you looking for? Who are you disproportionately well suited to help, Ed?
In terms of investors,
Just in commercial real estate, who's out there where you just can't get enough of them, like can't get enough like operators, or you want to get new people to commercial real estate, who are you looking for?
so from a personal perspective, I'm always looking to mentor, new and up and coming investors. I've been very fortunate that I've had several people kind of throw an arm around me, and I typically joke they either saw something in me or took pity on me. I'm really not sure which, but I was fine either way. And so, the way that I repay that generosity is by doing it for other people. In terms of the business itself, I'm typically looking for kind of three types of people, three buckets of people. One is obviously investors who are looking to diversify outside of the stock market and the bond market, as well as brokers who are looking for a reliable sponsor who can underwrite a deal very quickly, make a fair offer, and then close. And then the third is building owners who are one of the things that one of the ways that we build relationships with building owners is we help them, right? I mean, the fact is that we go through an exercise every quarter, what's stressing us out, frankly, what pisses me off in our operation. And we do a few things, right? We look at, automating it, delegating it, outsourcing it, or we just flat out stop doing it. And, So one of the things I find myself doing a lot with, business owners that I'm getting to know is helping them figure that out. And, at some point they will either get on track, which makes me very happy, warms my soul. And sometimes they'll decide that, this business, while straightforward, is very hard and it's not for them. And so then, I make them a fair offer and buy their building.
I love that. I love that. And as far as how to reach out, LinkedIn's a great way to reach me. I got a distinct last name, so it makes me pretty easy to find. This QR code right here, that goes to the FAQs page of 506B.me, where I offer compliance services. The lowest tier of that is just $497 a year, so it's very affordable. But Ed, if people are looking to reach out to you, should they go through a website or phone, or is there a web or social media platform? How should people reach out?
Yeah, so we're on all the major platforms: Facebook, LinkedIn, Twitter, Instagram, under Clark Street Capital, Clark ST Capital, and you can also go to Clark Street, so that's clarkst.com, and that will also hook you up with our team, our website, and if you want to learn more about something that we're doing, happy to help you.
Excellent, excellent, and it was great meeting you on the meetup when we found that and scheduled that. I only have one more thing, and it's not for you, Ed. It's for you in the audience, which is it's kind of a public service announcement, which is that if you've been watching this video and if you've been experiencing searing pains in your eyeballs and migraine-like symptoms, it's probably because there's a hideous, like just awful red button under here that says subscribe, and it won't happen if you just click on the button. And I know that medical care is usually very expensive. This is free. It costs you nothing at all.
Solve the problem immediately.
Right, exactly. And the reason why I want you to do it is because it means that YouTube might actually start paying for these videos instead of me, which would be absolutely amazing. And all it really does is it means that my videos might show up on your list of suggestions, but there's no guarantee of that either. And I just appreciate the fact that you spent this time with me. Just like you, Ed, I really appreciate you joining me today. It's been great getting to know you a little bit better.
My pleasure, Dan. It's good to see you.
Awesome, thanks. Make sure you 506B me. Any syndicators, make sure you 506B me. Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.